right, everybody. We're super excited for this session with Jeremy Allaire, the CEO and co-founder of Circle. Jeremy, it looks like we both put on our Nike polos. It's good to see you. How are you doing this
Yes,
evening?
indeed. Yes, it worked out.
Sure did. Sure did. Well, super excited to dive in on all the things that you guys are doing at Circle. But yeah, I'd love to start with, what was the original thesis and opportunity that you saw as you were building Circle? I mean, you're 10 years into the mission now. I've heard you say that you're at Circle 1.0. So catch us up.
Yeah. Yeah, I mean, actually, we're approaching 11 years since founding the company. Actually, about 11 years ago, really started Circle with my co-founder Sean. And just for background, right? I had kind of come into this space having spent the prior 20 years building internet platform infrastructure businesses, development platforms, application infrastructure, protocols for Web 1.0, Web 2.0, in a bunch of different areas, and really had kind of come into this space in 2012 and 2013, and really was excited about this idea that you could build a kind of HTTP for money, as we used to call it back when we founded the company. And the idea when we founded Circle was, what if we could take what we think of as money, which is in its sort of purest form, kind of government obligation money, like, the obligations of, say, the US government or another major government like the Europeans. And if you could express that as a digital currency, as an open protocol on the public internet, where anyone could connect to that, transact in it, anyone could build on that. And that, the idea when we started was that blockchains would become powerful enough to do that, right? In 2013, you didn't have any of that. But ideas like smart contracts, digital tokens, the ability to connect that to the existing financial system, those were the seeds of the ideas of Circle. And so we kind of began with this idea that we could build that up. And the sort of legal reality of being able to do something like a stable coin in a regulated way, and then getting the partnerships with the banking sector to do it, and then the technology of like Ethereum being able to let you build a protocol, but you build these kind of things. It took like 5 years for that to really develop. And then we were able to launch USDC. So the first 5 years, we were building a lot of stuff towards that. And then when it became really possible, we fully embraced the founding vision of the company and have obviously been building USDC since. And then to your kind of question and comment, which is, we definitely think about where we are today as super early stage. That this is still a very, very tiny amount of the electronic money in circulation in the world. It accounts for a very, very small amount of the amount of kind of electronic fiat transactions that happen in everything from capital markets to payments to stored value to all these things. So we're in the very, very early stages of this. And so it is kind of like we had this set of ideas and we've kind of realized them, like the 1.0 is sort of here. And but it's exciting because I think this is now on the cusp of becoming a kind of global mainstream infrastructure.
Yeah, absolutely. And there's a lot to unpack there from the origin story. But I wanted to kind of start with more recent events. Circles or USDC has seen its circulation, TVL or AUM, whatever the metric, has been up and to the right over the last few weeks. Like, what's driving that as the overall market is rebounded and you're seeing a lot more activity on chain? Like, how has USDC continued to grow and develop?
Yeah, so absolutely. I mean, we've really seen strong growth over the past quarter or so, and that's been driven by renewed enthusiasm in broadly digital asset markets, but we're also seeing more and more transactional activity more generally. And there's been a lot of interesting third-party data about the growth in USDC transactions and it's scaling out on different blockchains. We've been seeing just on a broader basis the kind of change from stablecoins sort of having their original birthright as sort of assets that are used as like working capital in the digital asset markets to more and more use cases. So we're seeing more and more cross-border use cases. We're seeing more and more digital dollar store of value use cases. We're seeing more and more international payments, SME payments. We're seeing use of USDC growing as really the predominant digital cash instrument with tokenized real world assets. And so lots of new use cases are growing, some of them faster than others. And what's been interesting about what we're seeing is it's overwhelmingly international as well. Like 75% of that activity is non-US. And so very strong internationally. And those are some of the kind of meta themes that we're seeing. And I think we're just excited to put more technology out, make it more simple, safer, easier to adopt, and then partnering with a lot of different types of companies that are really trying to bring this into either mainstream finance or mainstream commerce or consumer applications at scale.
So one of the things that you touched upon is just the programmability of digitally native assets. And so USDC, being one of them, like what kind of opportunities does that open up, and how do you think about the surface area that you're creating for merchants, for financial institutions, for e-com, like so many different verticals to leverage the technology? Like what is that up for you?
It's a good question, and one of the questions I frequently get is like, talk about the use cases for programmable money and or just generally, like, how are people going to use this? And I think one of the things it's important to do is sort of you step back and compare this to other things that happen on the internet, right? Programmable data or programmable digital media or programmable communications, right, on these open protocols. Those eventually took hold, and it was really when kind of the marginal cost of performing those activities approached zero that it really exploded. And so one of the first kind of principles here is a open, programmable, composable digital dollar that works on the public internet, that is, anyone can connect to and transact with. That in and of itself is super powerful. If you can get the marginal cost of storing and transacting in that type of digital asset to something approaching zero, that's when you can really see this extraordinary growth. And so we're just now kind of reaching that with layer 2s and sort of third generation layer 1s and a lot of different infrastructure improvements that are really, really making this kind of, I like to refer to this as like the dial up to broadband moment of blockchains and really what that unleashes. And what's interesting then is, getting to your question, is when you look at this, it's incredibly broad what you see in terms of use cases. We have examples of, people who built Web3 games where they're using, USDC and they're programming it into the game design, where digital objects are, kind of bought or rewarded with things like USDC. And people are able to perform micropayments at like 25 cents for a digital game object on chain. And that's an efficient transaction. And like, that's just some developer who built that. And we didn't talk to them. It's like, it's an open surface area for people to innovate on and build with. And so you have, at one end of the spectrum, you've got, something in many people's eyes, if you're talking about like TradFi or, big capital markets things, like something as mundane as like someone who's buying a digital object for 25 cents and doing that from anywhere on the planet, that was just not possible. You couldn't do that until you had, blockchain-based programmable composable money. So at one end of the spectrum, you have something like that. At the other end of the spectrum, you've got, the biggest asset manager in the world, BlackRock, who is one of the biggest asset issuers in the world, with all the funds that they issue, managing, close to $11 trillion in funds, launching a programmable, smart contract that encapsulates interaction with government treasury assets. Obviously, Superstate has a very similar interest, but like this idea of smart contracts that then encapsulate these other assets, and then you have an on-chain cash that can move between them, and you can programmatically do that. Like, it's unlocking that end of the spectrum as well. And so we have, in the middle, we have companies that are doing multi-$100 million transactions where they're settling that transaction at the speed of the internet with no counterparty risk, with high degrees of security and efficiency. And they're using the exact same technology and the exact same infrastructure and paying the exact same fees as that person buying that game object. So it's a really amazing thing. The other thing I would say in the answer to that question of, what are people going to do with the programmability? I really think that where we are is still in the pre-iPhone era of blockchain apps. We're very much in the pre-iPhone era of blockchain apps. We might be in like the Symbian Nokia smartphone era of blockchain apps. Like there is an operating system, you can create apps, but like you got to be pretty enthusiastic to use them, and it hasn't yet achieved significant scale. And actually, I think of blockchain networks as operating systems, and I think about the proliferation of all these as sort of like the mobile operating system wars and platform wars that went on until you kind of had a few of these platforms that really landed. But what's interesting about that metaphor is whether that's true or not, whether that's where we are or not, is what was amazing about the iPhone was it created a programmable surface area where you could create a new class of user experience. And it was a whole set of things that happened simultaneously. It was like good software, good hardware, and then it was the timing of the adoption of third generation wireless broadband. It was the addition of capabilities into devices like GPSs that could then be readily used. So the GPS became a programmable, object. Location became a programmable object. And, really smart entrepreneurs came along and said, what can we do with all of this? And there was, if you remember the original iPhone ad campaign, there's an app for that. And it was this amazing thing where there were apps launching for things that no one had ever thought of. And they were like, oh my God, there's an app to let me know what leaf that is on a tree, or there's an app that's going to deliver the food to me. But something like Uber, which we now are like, wow, that transportation, logistics, all this stuff, driving, delivery, it got completely revolutionized. But it was really just an entrepreneur who was saying, hey, there's a programmable GPS. There's like enough broadband that anyone could stick these in their cars. And there's a way to build an application experience that is great. And it exploded, right? So if we're in that place, if that's where we are with programmable money, and we're just now seeing this sort of generation of developers coming into Web3, which, as we know, there's a tiny number of Web3 developers compared to Web2 developers, just by orders of magnitude. So we're at the really beginning of this. And sometimes people say that's not a satisfactory answer, because my answer is basically, I don't know what people are going to do, because it's impossible to know what creativity is going to be unleashed from developers and builders and entrepreneurs. What I do know is, like, everywhere in the world, there are amazing people building amazing things. And so the sort of let 1,000 flowers bloom, that's exciting to me, to see what people are going to build.
Yeah, absolutely. I mean, there's the convergence of all those things all happening simultaneously. And then you've also, got a ton of, on the consumer application side, my understanding, Circle is working closely with folks like Nubank that have millions and millions of users, and the service that they're able to provide is dramatically more efficient and more interesting to their clients than, leveraging legacy rails. And so that type of, more user-centric development where there's real use cases and, a lot of the complexities behind the scenes of, how do you interact with a wallet and sign a transaction, and do I have enough gas for all this? Like, all of that kind of stuff gets abstracted away the more that, the front-end applications are thinking about the users and embedding that into the workflow.
Totally agree. And I think there's always this question with stablecoins. Well, stablecoins are clearly like the killer app of these blockchain networks, and that's played out in the data and what you see. But at the same time, right, people, the proverbial, like, why can't I buy a cup of coffee with a stablecoin? And you can in certain places now, but it's sort of the classic chicken and the egg. And so we are as an ecosystem broadly, but also Circle specifically, we're trying to solve for the chicken and the egg. And we're not doing that alone. Like, it's like tons of companies doing innovative things. But I think about two examples that kind of bring that to life. One that you just touched on, which is we are building partnerships with the leading consumer-facing fintechs. And there's examples of that we've announced, like Grab in Southeast Asia, Nubank in Brazil. They have 100 million users, and they are like, literally, they have a net promoter score of nine, which is like, or 90, I guess is the score. It's unheard of. Like, Apple has like a 72, which is itself just like stunning. So you're talking about a company that is extraordinarily good at end user execution. And so, they're making a bet on USDC, and they're thinking about, for all of these people in Brazil, but also ultimately more broadly in Latin America, how to take something like a digital dollar and make that safe, simple, easy to adopt, and then how to deliver those on-chain experiences. And I think to deliver that, you do need to abstract away the crypto and the blockchain of it, right? Throwing dialogues up for signing transactions, not going to work. Even things like, needing to cut and paste blockchain addresses, totally terrifying, right? So there's a lot of things that we have to keep improving from a UX perspective, eliminating, the need for people to understand even the concept of gas. Like it's not a concept that people really should have to understand. So there's really key things, but these kinds of companies can build those executions. And then we as a company are trying to solve at the infrastructure layer how to enable portability across chains, gas abstraction, paying fees and things like stablecoins themselves, like really trying to make that simpler. So that's one end. I don't know if that's the chicken or the egg, but it's one part of that. On the other end, we just had an announcement, which many people noticed, which was, John Collison, the co-founder of Stripe, at Stripe's Collision major event, announced that they're bringing online USDC payment acceptance right alongside credit card and debit card payments, and that's a big deal, right? Stripe has 3 million merchants around the world. It's one of the most valuable fintech companies in the world, and if you watch the demo and the speech from John Collison, he's like, this is the way it should be, right? You should be able to settle a transaction at the speed of the internet. The cost should be incredibly low. And I don't know if that's the egg, but you got the chicken and the egg. And if you can get these best-in-class companies that know how to deliver great experiences for merchants, great experiences for end users, solve the infrastructure problems, and then, we talk about regulation as well, but solving these problems, those things, keep doing that and building that out. And you can see a world in 18 months, in 24 months, where over 1 billion people can reach in their pocket and transact with this and not even know that they're using blockchain networks in the same way that we don't really know we're using SMTP or, VoIP when we use, a messaging product.
Yeah, and I mean, not a lot of people understand how credit card networks are, the like really
Sure.
work. And so you're not only talking about a much more convenient user experience and a much, quicker way to settle transactions, but you're also talking about a tremendous amount of economics that can get passed down to the consumer or create more margin for a lot of these businesses.
Absolutely.
There's a ton of downstream effects to leveraging this underlying architecture. So I do want to, like you mentioned, a couple of institutions there, although, some of them are B2B, some of them are B2C.
Yeah.
Let's talk about the institutionalization. Like the last 6 months or so has been a tremendous watershed moment for the entire industry. You have the ETFs that have been approved. You had, continued adoption like we're talking about here. Like, where do you think we're at on this entire, adoption? Have we turned the corner from an institutional standpoint from your conversations and what you're seeing in your partner network?
It really feels like we have turned a corner. And I'm seeing that every day. The number of, kind of mainstream financial institutions that are really leaning into this now is stronger than it's ever been. And that's around the world. I think what's really cool is that whether it's large internet firms, commerce firms, financial institutions, consumer companies, like people are leaning in more than they ever have. And I think there's two big things that are going on. I think one is regulatory clarity is actually arriving. And people throw around, we need regulatory clarity. And there's a lot of attention on the US, and there's actually a lot happening in the US as we speak, literally. But the sort of regulatory clarity is emerging all around the world. Every major government has either put into force or is putting into force different legal frameworks for stablecoins and for digital assets more broadly. And it's really encouraging. And we're starting to see nation state competition, in fact, for attracting Web3 entrepreneurs, firms in the space. And as a result, the places where you have more regulatory certainty, take Japan, for example, the number of major firms in Japan that are gearing up to build things, whether they're the big consumer companies, the electronics companies, the game companies, or the financial institutions, they all have things going on. And that's because there's legal certainty. You see the same thing now happening with MiCA in Europe. I think you're going to see a huge number of products that get launched under that framework. And it's because you have legal certainty. It's because a corporation or a household or an FI will know, oh, a stablecoin is a legal form of electronic money. And that's a huge deal. So I think the same thing is happening and will happen in the United States, and we're seeing some really interesting progress against that. But I think those all those things combine, and even the kind of clearing of the Bitcoin ETFs, and it appears potentially the imminent clearing of Ethereum ETFs. These are institutional moments where an institutional market structure is becoming available just on the digital commodity side of this, digital commodity and investing side of this. So all around the world, institutionalization is happening, and we're seeing that accelerate. And I think that's happening alongside the technological progress, which is happening in blockchain infrastructure, in a lot of the things that we talked about as well. So definitely a big thing that certainly benefited us, because when things become more institutionalized, people want to build on regulated, compliant infrastructure. They want to know that this is a legal instrument that is going to be recognized by the US government or things like that. And so I think it's certainly benefiting, and we're seeing increasing adoption of USDC even in offshore digital asset markets, which is important, because I think that's historically been a place where the compliance really sort of, people didn't play by the rules, but now obviously with some of the US government enforcement actions and other things, you're starting to see everybody's sort of saying, okay, we have to play by some rules here.
Yeah, absolutely. And, if you look at, even like how Speaker Ryan, I think it was, or former Speaker Ryan, was out talking about just the defense of the dollar could be predicated on the growth of stablecoins. And you just, the backing for Circle is largely in treasury bills and repos. And so there's a tremendous amount of demand there. But I'm just curious, like, what your perspective is on, private versus public, CBDCs versus stablecoins. Are those a either or? Is that a potential for collaboration, or how do you view the landscape, with publicly issued and privately issued instruments?
Yeah. So I think for major governments and major fiat currencies, clearly there's an incentive for them to kind of upgrade the core infrastructure that they run on. And you see this in India with UPI. You see this in Brazil with PIX. Those are just two recent examples. And so upgrading the core infrastructure of central banks to be on a more modern technology model just makes a ton of sense. Like, we shouldn't handicap that. At the same time, though, the kind of intermediation, which is really the layer at which the retail market, which includes like businesses and households and individuals, like that layer really needs to be driven by a constantly improving, constantly innovating technology stack, and then under good supervision. And so we really believe it's that private sector innovation that's driving things. And you see that even in a place like China, where, the ECNY has had very, very limited traction. People have really wanted to continue to rely on the private sector, Alipay, WeChat Pay, et cetera, for their kind of digital money experience. I think when you start moving into the world of open, interoperable, smart contract-based, forms of finance and commerce, right? It has to be based on a kind of stablecoin model. And I certainly believe that if you end up with things like the Payment Stablecoin Act in the United States, that you effectively get cash equivalent instruments that can then operate on this programmable, composable, open internet infrastructure. And I think that gives you the best of both worlds. And certainly I agree with the view in terms of the opportunity, whether it's for the dollar or the rupee or for whatever it is, to kind of enshrine and grow, these currencies with respect to the relationship to the fiscal authorities and the governments. Without a doubt, I think it's important, just as a macro data point, that there's about $100 trillion of M1 money, in the world, M1 and M2 money in the world. And I think that electronic money supply is huge. And again, we're in the super early stages of that. But I think my own belief is that stablecoin money, with its full reserve characteristics, is going to be a very, very attractive form of electronic money. I think a far more attractive form of electronic money than IOU bank credit electronic money. And so I do think that there is a competition that's going to happen in the market over time. And then how, credit intermediation and time, time and maturity transformation happens can that innovation can happen on chain. That innovation can happen in the smart contract world with more safety and transparency, than ever before. I've had your colleague Robert on my podcast a couple of times, and we talked about with DeFi, right? I mean, so much of this is this concept of how you can innovate in credit models, in an on-chain world. So we're again in the early stages of all of that.
Yeah, not only just the access, but in terms of seeing where the risk is and the automatic liquidation or risk management that's programmed into these systems that's not relying upon, a risk management office
Absolutely.
at a spreadsheet on a regular basis. So much more of an efficient market that's potential on blockchain rails. So I know we only have a minute left. You mentioned, $100 trillion in M1. We got $30 billion in USDC. What does chapter 2 look like for Circle in the next 5-10 years? How do you think the company and the product will continue to grow?
It's a big question, which I can definitely not answer in a minute or less, but I'll say, like I said earlier, like we are in the early stages of this. I think about, other internet infrastructures that kind of radically change the underlying unit economics, whether it was of media or information or publishing or communications or video or TV, all these things. We're going to see a similar unit economic revolution and user experience revolution. And I think that the kind of velocity of money on platforms like what we're doing should be far, far higher than the velocity of money in the existing system. And the scale of economic activity can be larger as a result. And so, I'm optimistic over 5 to 10 years that, this could become, this whole category could become, single digit percentages of the total global financial system. And that would be extraordinarily large if you took that kind of on, and not dissimilar to the growth of internet TV and internet communications and other things over 10-year periods. Right, you start to get into like those single digit percentages, and those can be really significant at scale.
Well, it's going to be exciting to watch the next 10 years. I'm sure the first 11 have gone by in an instant, and I'm sure the next decade will as well. But thanks so much for spending some time, Jeremy, and walking us through what you're doing, all the great things at Circle.
Thank you, Jim. My pleasure.